welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities to get into some stocks. To evaluate stocks and look at their fundamentals. Sometimes stocks are popular, but I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones, they all produce high free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are big cap stocks going to come back? Chinese stocks are exploding. The dragon has awakened in China. It could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Hey, welcome everybody. So we had a little bit of a down day today. No big deal. We can dust ourselves off and move on to the next day. It wasn't too bad. It would be nice for the stock market to go up. We all like stocks that rally. And I thought what we could do today is just talk about stocks that we are selling, stocks we are buying, as we see the market, depending on the sector, sell off and provide good value in some stocks. And in some cases, some stocks are getting a little expensive. So I'd be curious to see what people are buying and what people are selling. So very good to see you, Tomas. It looks like you sold a little bit of Meta and you bought some Airbnb and some Ternium. I like all the above. I think Airbnb is kind of beaten down, and I'm just going to quote the CEO who said their Q2 was going to be a little light, but that they were going to overachieve in Q3 because of a couple of factors. Probably the one that is easiest to understand is the Olympics were held in Paris, and Airbnb housed over 400,000 people that were in Paris or France for the Olympics. So that's going to be a nice quarter for them, the quarter that just ended. So when they announce their earnings in the next 30 days, I'm expecting that Airbnb is going to come in strong. And I hope that's the case. And I hope you make money on Airbnb. Ternium has been going up nicely, which is good. And it pays a really nice dividend. So it pays you rent while you wait in that stock. So not a bad choice. I own all three, and I've been buying into all three. I've been buying a little bit into Meta. I've been holding on Airbnb because I own a lot of Airbnb. And Ternium, I bought a little bit. I have a good position in Ternium, but I'm good on all three. So good to hear. Good to hear from you on that. I'll share with you some of the other stocks that I bought and talk about a few that I've sold. So thanks everybody for joining. I appreciate it. Let's get going. So the market was down a little bit, right? The NASDAQ was down 5.05%, but let's not forget that the NASDAQ is up almost 35% in 1 year. And when you look at the last 2 years, right? If we look at from the beginning of 2023 to where we are at now, which would be a year and 9.5 months, we're up 74%. So it's been a great market. When I talk to the fact that, you want to be in growth stocks, you want to be in stocks that are really going to appreciate, this is the reason for it, is you really want to take the elevator up when the market's working, and staying invested is important. It doesn't mean you don't do your homework. It doesn't mean you don't, maybe sell a stock that you should be selling. But what it does mean is, try to find stocks that are really going to accelerate appreciation. And that's really the focal point for me, is trying to find really good investments. Investing takes homework, takes some long-term thinking, takes some patience, takes a little toughness, but the payoff is great. You can make millions of dollars and accumulate wealth with stocks. And this chart should communicate that to you. You start with a sum, you keep adding to your capital by working or, having a business, however you get capital into that pot. But make sure you have stocks that are really going to appreciate over time and make money for you while you sleep, compound over time. So just in the last 2 years, it's been an awesome market. And over the 5 years, of course, the NASDAQ's up 100, I'm going to call it 127%, which is a phenomenal rate of return. So the S&P is doing great as well. If we look at the year to date on the S&P, almost 22%. It also has a similar chart. Not as good as the NASDAQ, but very, very good. And then the Dow has done okay. It's done 12.5%. And the Dow tends to be mostly dividend paying companies. So you got to add the dividend to that 12%. But overall, good markets. I'll take them. It's good times. And this week is just, it's a little back and forth. We had a down day on Monday, 2 up days. Now we have a slightly down day. Who knows what tomorrow is going to bring. The month of October tends to have really bad periods of time. Some of the worst crashes have happened in October. So that's why I think a lot of investors are careful or are just expecting maybe some bad things to happen in October. It's almost like, hey, it's the Halloween month. So there's going to be some scary scenes in the month of October. If you don't like scary movies, don't go to the movies in the month of October, because that's what they're playing. If you don't like adversity in stocks, maybe ignore the market for a while. Come back in November, mid-November. But for the next month, I think we're going to see a lot of volatility. We have the election coming, and we just had a hurricane hit Florida. So I hope that, the impact, from what I've heard, the impact is not as bad as I feared. It's still really bad. I still really feel for everybody there, everybody who's injured, everybody whose home has gotten damaged. But it just seems like it's not as bad as it could have been. So I'm glad to hear some of that news, and I hope that's the case. So, all right. So a couple of things that I wanted to go over. So China. So the Shanghai Exchange did rise. Their trading day is over, right? Their trading day ends 10 hours before ours begins. And it went up 1.32. And what was interesting was stocks in the US opened up lower, and then they came back. So like BABA came back, went up 1.29, which was good to see. JD went up almost 1%. NetEase was down like 4 or 5%. It came back. It's only down 1%. So it was good to see that. I hope that these stocks can build on top of that. They can kind of get back on an upward path, up and onward. And it's probably a little too early to really take a peek at that. So we'll see how they open up tomorrow. So what should we expect during the stock market? So, one thing that is very true, interesting about the stock market is it's so darn emotional. When there's a lot of fear, investors tend to sell off, and they sell off just to reduce, I guess, their anxiety level. And with an election, there's uncertainty. There's who's going to win the election. Is it going to be a peaceful transfer of power? Is it going to come with, some turmoil? Is it going to be some crazy story that comes up? Those are all things that are on people's minds. And I think that's going to add to the overall anxiety. So I think when you have an election, like the month leading up to it tends to be a month where not a lot of gains are going to happen. But after the election, there's the relief rally. Like everybody's like, all right, great. We know who won the election. We can move on. We can stop thinking about that and just think about stocks now. So that's what I expect is going to happen. That's a theory, and we'll see what really happens. So, hey, Brad, very nice of you to join. Thanks for checking in. How are you? All right. So we went over China. We went over the economy. There's a couple of stocks that I wanted to touch base on. And I'll tell you, the stocks that I sold, and I'm going to say the last 30 days or so, one of them was Starbucks, and I liquidated that whole position. It went up very quickly, and that's why I sold it. And I'm glad I did so. I think it was the right move for me. And they got the new CEO. It really jumped up. I started buying in this zone, and I'm going to say I was lucky. I did do my homework. I did think it was unappreciated. And as soon as they got that CEO, boom, it went up. So I was able to liquidate at a really nice gain, and I only held the stock for like less than 2 months. So that was a really, really good win. And that's one stock that I liquidated. I also liquidated Zim. That one was a little hard to sell, but it's a very true statement to say, deciding to buy a stock, it takes, careful analysis. You got to weigh your option really carefully. But I think it's a lot easier to buy stocks than it is to determine when to sell stocks. Sometimes you're sitting on a stock, you really believe in it, but it's just not going to go there. Like I feel that way about United. I sold that months ago, but I was right about the valuation. I was right about the business growing. I was right about a lot of things, but I just didn't understand that the market doesn't like airlines, and it wasn't going to rally as much as I would have liked. So I got out of it. I didn't lose much, but I think my capital was kind of tied up for the time it was there. So I guess opportunity cost was lost. So I sold Zim. It was a little bit tough, but I'm glad I did so. It was a good stock. I made good money on it, and I had an exit plan, and I got out. A stock that I did sell at the end of last year that I regretted was Amazon, and I'm buying back into Amazon as quickly as I can. I bought Amazon yesterday, and it rallied today, which was good. Today, I bought some Qualcomm early in the day, United Therapeutics. I bought some NTES, Chinese stocks, some JD. I bought the Chinese ETF, FLCH, and I bought them early. So in the day, my investment appreciated. So those are some of the stocks that I bought. And I created, some extra cash by selling Starbucks, by selling Zim. That collectively was about $60,000 that I could put into cash. And I already had a cash pile. And leading up to this time, right, over the last 3-4 months, I was kind of a little bit of discipline on my portfolio. I would really look at all my stocks and say, okay, which one's the weakest link of the whole portfolio? And kind of just look at them and then make a decision. So I was selling maybe one stock off the portfolio a month. and I've gotten to this point. I've got a good cash pile. So going forward, I did start a position in Ali. We talked about Ali this week. I analyzed it. I haven't made a video, haven't had time, but I could show you the analysis on Ali. I think that one there, I made money on it. I got out. The stock's really gone down because there was some bad news out there. And I kind of feel like it's going to go up again. So there's nothing wrong with making money on the same stock a few times. I've done that before on other stocks. So I got about $1,000 of Ali, and I'm off to the races with that stock. All right, so let's take a look at Ali to begin with. I'll show you what I'm doing there. So Ali today was down about 0.5%. It's up in after hours, but so this stock over 1 year has really worked. Okay. But then there was some news here where there was some reports that showed that the consumer is really struggling to make their car payments, and that really caused a big sell-off in Ali. It went from $43 a share down to $32 a share. That was a big drop. And I took notice. We analyzed it this week. It was already a stock that I had ready to go because I've been an investor in Ali. I've had my I did a video in April. I think that's when I sold. And I sold at a nice gain. I saw that financials were a really good place to be in 2023. Over the course of 12 months, great return. Some of them phenomenal returns, like Robinhood just ended up being great. Coinbase is very good. Even Citigroup was a really good investment. Ali was a good investment. Allstate was a good investment just across the board. Financials were really beaten up last year. There was a lot of fear in the market. And I think the acquisition price that the stock is offering right now is really good. So I view it as it being discounted by about 65%. So I'm happy to buy shares. In the meantime, this stock is going to pay me a nice dividend of 3.42%. I don't invest just for the dividend. I want it all. I want appreciation and I want the dividend. Why not? So I think this stock is going to go up. I think the economic news is positive that, the economy is doing better than what we've been expecting. We've been expecting, and I've been expecting for the last 2 years, that a recession's coming. Well, I don't know that a recession's going to come. If we have a recession, it's going to be fairly easy or light, not too painful. And we may end up kind of getting through it without even knowing it. And then all the statisticians are going to tell us, hey, we just went through a recession. We officially went through a recession. It'll be like, oh, we did? Okay. Well, it wasn't that bad. We didn't even notice it. So having said that, I think Ali is going to do well in that environment. So that'll, we'll see how that plays out. I bought $1,000. How do I invest in a stock? I am going to dollar cost average my buy into Ali. I could invest $20,000, $30,000 in Ali. But I'm going to do it by dollar cost averaging. That way, if it slips another 5, 10%, I buy at those price levels, no problem. It's just really hard to pick a date and say, I'm going to buy $20,000 on that day. It's just not how I invest. It's much easier to pick a time when I believe that the stock is discounted. And I believe that the stock is discounted. If you look at this big drop in the stock, it was all fear-based. It was a report that, hey, the consumer is struggling. It was a company official that made it. But at the end of the day, there's other competing news stories that say the economy is actually okay. So let's see how that plays out. So it looks like, Brad, you bought some Pfizer today. Pfizer did have a pullback. I bought Pfizer shares. I was glad to buy them. This is one where I just think it's going to go. It's going to happen. Fundamentals are there. It's a really strong business. I showed, I think it was last week where I showed the most valuable companies like 20 years ago. Pfizer was on that list. 15 years ago, Pfizer was on that list. So it looks like this stock, if it can get back to $40 a share, it's going to be a really nice return. And I really think that, by the end of 25, I'm expecting this one will get to about $40 a share. We'll see if I'm right or wrong, but that's my expectation. I think the fundamentals are there. I think the business is going to start growing. That's important. Last quarter, they grew at 2%. That's after a run of quarters being negative because they're the ones that came out. They're one of two companies that came out with a vaccine. So their revenues just went through the roof. They were growing 95% in 2021. So once COVID was over, it was very hard to grow past 100 billion. So they settled back down at 58, which is still higher than their number in 2019. And now the business is plateaued, but now it's beginning to grow. So we'll see if they can accelerate that growth. They have the activist investor that's in the company that's probably asking them to really get back to basics. Let's take care of the stockholder. The management's full-time job is to maximize shareholder value. That's what they're supposed to be doing. They work for the owners. They work for us, the stockholders. So let's hope that that's the case. And let's see where Pfizer ends up at the end of 2025. So I don't know. So the biggest news tomorrow is going to be earnings. And there's some big ones tomorrow. The morning is going to be active. JP Morgan, $607 billion market cap company, is going to come out. And that one is going to move financial stocks. They will have comments that are somewhat of a report on the whole economy, a report on the whole sector, a report on how healthy financial services companies are. That's probably the most influential report in financial services is going to come from JP Morgan. Wells Fargo, big bank, big revenue bank, is also going to announce tomorrow. BlackRock, which is smaller, but more into private investing. And of course, they have ETFs and so forth. And so for financials, and you got this bank, the Bank of New York Mellon, which is 54 billion, not that bad. It's pretty good market cap. And then Fastenal, which is a industrial stock, and one more bank. So just big news in financial services. And we'll see what these banks have to say. I'm going to cover in the live stream in the morning. I'm going to cover JP Morgan, Wells Fargo, BlackRock. I'm probably going to have that being 60 to 70% of live stream tomorrow morning, kind of getting into those, kind of seeing what the earnings have to say, see if we can form any conclusions of, hey, this is where the economy is for financial services. And financial services will tell you a lot about the economy, because if they do come out and say, hey, the consumer is struggling to make their payments, I think that'll have a negative effect on the stock market, because the stock market will get a little nervous. But if they don't, and they say, well, we're actually growing and things are good, and the move in interest rates isn't going to affect us all that badly, then we'll see. We're going to be off to the races. So that's tomorrow. And then next week, we're going to have big earnings. Like Tuesday's huge. When you look at Monday, nothing big. But Tuesday, huge day. ASML, they're the ones that make the big robotic machines that make semiconductors. Abbott Labs, pharma, healthcare. Morgan Stanley, more financial services. Prologis does the logistics. U.S. Bancorp, mid-sized bank. I was a stockholder. Did well with that. CSX, we looked at CSX yesterday. Kinder Morgan, which I believe is in the oil and gas industry. You can see these market caps are all like mid-cap. Tuesdays going to be what this day is all about. Just a lot of earnings are going to hit the wire. And this one's going to be really hard to keep up. I'm probably going to go to the ones that make the most noise. So bit mining, that's cryptocurrency. That's after the close. So I'm probably going to focus on everything that reports before the market opens, and I'm going to live stream on Tuesday afternoon to cover, I think, the most interesting earnings that come out on Tuesday. And it just continues, man. It just continues on and on, like 37 on Wednesday, 17 on 44 on Thursday, 59 on Friday. I think the oil companies come out here. No, was it on Thursday? Usually the oil companies like to announce on Friday, but it looks like it's not the case this year or this time around for this quarter. So it's going to be a big, action packed couple of weeks. Earnings last about 2-3 weeks. The big volume earnings reports, and then it's going to linger for like the next 6 weeks. There's going to be earnings. Like Nvidia has a very delayed earnings, even though they're a big, massive cap now. So that's what the big news is going to be. It's going to be around these earnings and investors trying to get a pulse of where the economy is and how strong is technology. Is semiconductors still going to keep booming? Are the hyperscalers like Google, Alphabet, Microsoft, Amazon still spending a lot on GPUs, or are they pulling back? That'll really affect Nvidia, and I think investors will be curious to get an answer to that question. Yep. So I am live. So I I'm gonna I'm gonna live stream each morning, Mike, and very nice to see you, by the way. And I'm gonna try to stick to a schedule. Each morning 6:30, and then I'm gonna try to do Tuesday, Wednesday, Thursday. That way I can keep a schedule. You guys know when I'm on, and we can get together and talk about stocks. So, Mike, FSLR. Let's take a look at FSLR. So forgot the F in FSLR. First Solar, I saw that it really went down 9%. Now, where is solar going to go? This stock really moved up. Look at that, 264%. This one is still up 42%, but at its height, it was a $300 stock, and it's down about 33% from that high. Now, solar, I think if the Democrats win the presidency, First Solar is going to rally because Democrats tend to like really fund clean energy. If the Republicans win the presidency, I don't know if there's going to be a rally because Republicans are not in favor of a lot of green energy. It's mostly the Democrats that really push that agenda, and I think that's going to be interesting to watch. So First Solar, let's take a look at the revenue. They have been growing. Look at that. They're growing nicely too. And I wouldn't say that there's a lot of like incentives to buy solar. I got solar on our home a number of years back. Incentives were great, and it ended up lowering my overall cost. We pay less for electricity than we did before. It was a win-win. Um, but I think a lot of those incentives are gone. Hopefully they bring them back because I think we could use the extra uh, power because it seems like these data centers are really going to take a lot of electricity. So we got to start generating. And then you think about all these EVs that are coming on the market. How are they being charged? So all those factors taken into account, I think the solar space should continue to grow. And this company continues to grow. Let's value this company. I haven't looked at First Solar. If I looked at it, it's been a while. I really like the growth. What's the quarterly look like? The quarterly is solid. When do these guys announce? So they're discounted by 39%, according to analysts. They announce on the 29th. That's around the corner. Why did the stock sell off? Why did it sell off? So Jeffrey said, hey, we don't like the stock. So boom, it fell. I don't listen to analysts like I'm willing to look at what they have to say, but I don't base my decisions on what analysts have to say. Sometimes they see things that are totally irrational. All right, so I really like revenue. Now let's take a look at balance sheet, see if the balance sheet's in good health. And maybe this is one, if it qualifies like balance sheet and the cash flow looks good, I can kind of do a valuation here with you guys on the stream. All right, so we're looking at balance sheet. They have 1.7 billion in cash and they have 621 million. So they have 1.12 billion of excess cash. I like seeing that. That's a super strong balance sheet. That's a chiseled balance sheet. It's been going to the gym every day, just getting ripped. Cash flow is negative. Let's take a close look. See if it's maybe a temporary thing or if it's just inherently a cash burning business. So let's take a look at free cash flows. Man, they've been burning cash for a while. So this is interesting. What's going on with cash? Let's look at cash from operations. So they turn a profit, you add depreciation, and the negative effects on cash are one, change in inventory. Their inventory is rising. They got more product in the shelves of their inventory, which consumes cash. And you can't, until you sell that inventory, you don't get cash back. And then change in net operating assets. So there's some type of reclassification, and this is where the money's been. I think they had to write down some assets, and that's a non-cash item. So the money that's driving the negative cash flow is here and here. And let's look at CapEx. So CapEx has also gone up. See how it's gone up from 400, 500, 900, 1.4. Now they are growing. They are growing. I'll give them that much, which is, okay, they're growing. At some point, they're going to hit scale. They're not going to have to put so much capital into the business. So when that happens, like when I bought Uber, I had to project things before they were made obvious. And it was a really good move. Maybe this one is something we can play around with. So let me look at the forecast. 24 analysts say this stock is something they want to track. And they're saying collectively that it's discounted based on earnings per share by 39%. That's really good. And the worst case scenario that an analyst is putting out there is that it would drop to 185, which is a 10% drop. But one analyst thinks, hey, you can go up 80% on this stock. So that's a pretty broad disparity between analysts. That's interesting. So the earnings per share this year in 24, it's $13.85, and it's going to jump up to $21.83. So probably that CapEx you're seeing is they got to scale up. If they're going to grow from here to here, 26%, and then they're going to grow from here to here, which is another $1 billion. You know, that revenue doesn't kind of make itself. You got to invest in the business. You got to get it out there. So I think this is a good company. This is a very good company. Now, I'm going to make the assumption that um, I'm going to take the presidency completely off the table. I don't care. I don't care who wins or loses. I'm not expecting a benefit or a decline based on the presidency. So that way, I can just look at the numbers as clearly as I can, because this one's going to be a little bit of uh, a, a an analysis that takes a little bit of creative thought. So what's a good stock to compare them to? So let me compare them to Uber. Or I should say, let me start with the Uber valuation and then replace all the numbers. All right, so First Solar. mean, all I hear is we're going to need so much darn power for AI. And then, of course, all these EVs are being sold, right? And I don't know that the utility companies are opening up new power plants. I know that there's been plans to resurrect some nuclear plants, but that takes a long time. So getting um, solar on people's roofs, that totally makes sense to me. So First Solar doing well makes sense to me. And I bought solar, so I could tell you for a fact that I'm saving about $150 a month on power cost. So that's good savings. And that's after I pay for the solar panels. They offered this really inexpensive financing. I think it was 2.9% on the financing. And I'm like, well, I can outperform that on the market. So I'll go ahead and take your financing because you're saving me money on power. And after I pay that interest, I make my monthly payment. I save 150 bucks. Over the course of a year, that's 1,800 bucks. It's pretty good. Pretty darn good. So, all right. So let's get into this. Let's value this company, figure out what is it worth. Is this the next Uber? Let's see. Let's see. So what was our symbol here? It was FSLR. Okay, so First Solar is a riskier company. Okay, as we walk through these steps, I'm going to slow down because you guys have been asking really good questions about valuations. So I'm going to slow down and take you through how I make this decision and give you an example. And then when you use your valuation techniques, you make the decision based on the risk level you want to take and your threshold and what kind of return you want. So since First Solar is a little riskier, some factors are probably going to weigh on the stock. I'm going to go to 9% discount rate. I want a higher rate of return from First Solar. Now I'm going to start with earnings per share. And then I'm going to form a forecast. I'm going to look at their numbers and then form a forecast that I believe is likely going to happen. So let's go through that together. So I'm going to start with the earnings per share. And the earnings per share was I'm going to use 2025 numbers. We're close to 2025. So I'm going to take earnings per share, which is $21.83. And it's expected to grow in 26 by 37%. I'm not going to go 37. I'm going to go 25% growth on 21.83. Since it's a growth company, I'm going to go with a PE of 36. Let's see what kind of valuation we get there. So that's 21.83, 36 PE, and 25% growth. Move to our model here. So it was earnings per share is going to be $21.83. 36 PE for a growth company that's going to grow at 25%. So the earnings per share is just really, really high. And what did I do wrong is what I'm asking myself. So the stock price is 205. Guys. So if they're basing their valuations on 1385, see the forward PE drops to 9.39. If these guys are growing at 25 to 35%, why would a company be valued at a PE of 9? That'd be irrational. But their average PE they're using is 9.39. Interesting. Well, I think they're going to make a lot of money. So I'm going to tone my valuation down a bit, but it's still going to be just a phenomenal return based on earnings per share. So that looks really good. Now let's talk about cash flow. This one's going to take a little bit of thought here. And when we look at their free cash flow. I'm gonna look at the quarterly so I can get as much detail as I can. So free cash flow is operating cash flow minus capital expense. Okay. And as I showed you, they're spending more on the business, although it's beginning to really normalize. They're spending like 320, 370, 380. And I think they're scaling up because they're expecting to grow. This number should come down to some extent. They're building up inventories. We saw that earlier. We're seeing that they're building up inventory. Now think about the seasonality, right? Solar systems are not installed in the winter, right? So they're typically installed in the spring, summer, maybe the fall. We're kind of getting into late in the season for installations of roofs and working on top of roofs, installing solar. We're beginning to get weather. Needless to say, we got a massive hurricane in Florida, another massive hurricane in the southeast that happened 2 weeks ago, case in point. And then soon it'll start snowing in the northeast, in the Midwest, and it's just the elements do not allow for a lot of solar to be installed. So we will see how those things play out. But the buildup of inventory is a little bit of a mystery. Why would you be building up inventory as you head into your slow period of the year? That is interesting. Although their inventory did slow down in the most recent quarter. Okay, so what I imagine is going to happen, you see this top line, their profit keeps going up, which is good. Now, this is profit when they're a $3.7 billion company, but we saw in their forecast, they're going to get up to like 5.8 billion. So they're going to be $2 billion bigger. So I think their profitability is going to get even better in proportion to the revenue. And it showed up in that 2025 earnings per share. So as we look at the cash flow again, I think this number is going to be more like 2 billion. So there's like a $800,000 improvement on the top line. So I'm going to say plus 800. And when we look at inventory, I don't think that they're going to build up inventory forever, but I'm going to leave that alone because it's if they're going to scale up, they're going to have to buy a lot more product, put it in inventory, be ready to do the installations that need to happen. As we look at this here is a little bit of a mystery. Let's see what quarter it happened in. And then we're going to go put on our forensic accounting hats on and go figure out what happened here. So change in other net operating assets. What's weird is it's been negative, positive, negative. Okay. So it happened in Q2 and it happened in Q4. So let's go try to find what was it? What is that? And we can probably get more clarity when we look at the actual financials that come from the company's financial statements on their website. So I type in the stock symbol, investor relations on my Google Chrome browser, and we're off to the races. Now we're doing forensics here. What's going on with their financials? So we go to their financials, Q2. I want to get right into the 10Q. Every publicly traded company on the New York Stock Exchange has to give us financials 4 times a year. This is the most recent financial. I believe the statement of cash flows had an item that was about 150 million. And I just want to know, what is it? What are they writing down? So we're going to the cash flow. So here's other assets. So it's a write down of assets. So are they writing down installation equipment? Did they install a big solar array and they're thinking, oh, the useful life is going to be shorter, so they're writing it off? It could be all those things. But it was an adjustment that was made on the income statement and it's getting reversed in the statement of cash flows. Statement of cash flows reverses every non-cash event on the balance sheet and the income statement. So let's take a look at this here. So they sold their product, okay, and this is for the quarter in the first two columns, and then this is for the first 6 months, and the two columns furthest to the right. So this looks good. You got gross margin of about roughly 50%. Looks good. Selling expenses there, no problem. Research and development, no problem. Okay, and this is where, okay, so you have foreign exchange. So I'm not seeing where they have a big write-off. If they write off an asset, they have to put it here somewhere, and I'm not seeing it. Okay, couldn't find that. Okay. Well, that's going to be a little bit of a mystery, but I'm going to proceed. I'm just going to add 800 million to that statement of cash flow to see what we end up with. So when we go to First Solar, we look at trailing 12 months. We had a free cash flow number of negative 224. If I think their profitability is going to expand by 800 million, I would go 800 million minus 224, which is going to get us to about 575 million. So that's what I think free cash flow is going to be in the future. I'm not going to go year one. I'm going to go year one is 0. 575 is going to be in year 2. Okay. Now, when I do this model, I'm creating a free cash flow forecast. Now, this company is growing very dynamically, kind of like the way Uber was growing. I'm going to go 20% and then 5%. Okay. So I'm not expecting in the next 12 months, when it says period 1, it's the next 12 months. Not expecting any free cash. Okay. That'd be overly optimistic. But a year from now, I'm expecting this company is going to be $1 billion bigger. And by that time, they're going to begin to generate free cash. And I'm going to put it at 575. And from there, I'm going to grow it by 20% for years 3, 4. And here's the 20%. All the cash flows after that are going to grow up 5%. And that's in this formula. If you follow this formula, it's going to draw on this growth rate. It's going to use the calculation for terminal value on free cash flows and give us a number. I'm going to discount all these cash flows by 9%, which is the weighted average cost of capital, the rate of return I want on First Solar. And it says, okay, those cash flows are worth $15.7 billion in today's value, net present value. All right, we had these numbers, and the numbers, I think they had more cash than they had debt. So let's take a look at those numbers again. Cash 174, debt 622. All right, so cash is $1,740,000,000. Very good sign when they have that kind of cash. And then we've got our What is our market cap is 21.95 billion. Shares outstanding 107 million shares. So based on this cash forecast that I'm like, you know what? I think this is going to happen. It's a 23% premium you're paying on the stock. They can exceed that free cash flow forecast. They can fall short of it, but it's the best forecast I can put out there. But this earnings per share is so going to be so positive. Overall, I think the company is discounted. And I think solar is going to be in demand. I think that there's just going to be a need for power. We have data centers. I was hearing about how OpenAI is going to need they're looking at a data center where it's going to have 2 gigawatts of power just for that one data center. And 2 gigawatts power multiple big cities, like the whole cities, just for one data center. If that happens, holy smokes, where are people going to get power to run their air conditioners, to power up their EVs, to do all kinds of things? So that's an interesting stock. I'm going to follow it. I want to go through one more earnings on that. I don't have to pay anything to listen to their earnings. And then I'm going to get this election behind me and see where this stock is at. Because I'm seeing growth. I'm seeing a vibrant company that's growing. I'm seeing a stock that isn't completely gone berserk. It's up 264 over 5 years. It's up 42%, but it's had a pretty big pullback. It had kind of it screamed up. I wonder why. It screamed up from $200 a share to $300 a share. And then it settled back down to 200. So I think it's a pretty interesting stock. October 29th, get one new set of financials. Go look at that free cash flow. Update my analysis. This puppy is going on the watch list, and I'm going to be watching it. I'm like a patient fisherman looking for Moby Dick, looking for a big giant marlin, waiting for it to come and I can hook that big marlin. So I'm going to watch it. It doesn't cost any money other than my time to watch a stock. So I'm just going to note that so I can come back and tidy up things later. But there you go, Mike. I think First Solar is really interesting. These are the stocks that I love, because if you're the early bird, you got to dig a little bit more into that soil, but you get the fattest worms. And this one here may be a little bit early. I mean, it's been working, so it's not the only one that's saying, whoa, the numbers look really good. I think a lot of investors are. But that pullback is like, whoa, hey, especially if we have like a bad October and a lot of stocks get taken down, that's going to be one that I want to keep looking at. What sector are they put into? Is it an industrial? No, it's a technology solar stock. I would have guessed this, to me, is more like an industrial stock, because they're making solar panels, putting them on roofs, collecting power, putting it into electrifying that home, and excess power gets put into the grid. But that's me thinking. All right. Thanks for asking, Mike. That was a good one. That was a fun exercise. Hopefully you guys found it interesting. Pal Miz 100, thank you so much for joining. We were down so bad. Now it just continued to go up. Yeah. I was talking about it earlier in the stream. It's been a really good market for 2 years. I'll take it. Oh man, you missed some of the action, huh, Mike? But hopefully you caught most of it. And obviously it's recorded, but I went into First Solar and went all the way on it. So, Brad, let's talk about NVIDIA. NVIDIA had a terrific run this week. And NVIDIA is just, they've had a run that's really unrivaled. Unrivaled, man. Look at that. Holy smokes. So impressive. Have they exceeded their previous high? We're at 135. Not quite. Almost. You're almost to the mountaintop, NVIDIA. What'll be really interesting is, are they going to pierce through that all-time high? Are they going to settle back down? Since June 18th, I guess we're coming up on 4 months. They haven't exceeded that high. Super interesting. Super interesting. Now you're asking somebody. I feel like a wolf disguised in sheep's clothing when I talk about NVIDIA, because I am shorting this stock. Now, I might be the only one out there shorting the stock, but I started shorting it around here. So I guess I was right about something, that the stock had really maxed out or was near its maximum. And my short position isn't doing all that bad, considering that it's NVIDIA. It's like jumping on a freaking cruise missile and being able to hang on for a while. It's been certainly worth the price of admission. It's been up, down, sideways since I got into the stock in a short position. Short positions are super risky. I'm only risking like $9,000 or so, maybe $10,000. The rest of my portfolio is much, much bigger than that. So even if things go really bad with NVIDIA, it's immaterial. I just wanted to do it so that I could say, I thought NVIDIA was priced too high. And in a way, I'm proving that, okay, maybe I wasn't completely wrong. I haven't been completely right yet. We'll see where the market takes it. If the market takes it to $200 a share, I'm going to raise the white flag and say, I was wrong. And I have to pay the market for that lesson. Here you go, market. It's like I'm attending Harvard, but I don't get a diploma. Here's the money. If I'm correct and it drops and I make 30% on a short position, which I've made some money on some shorts and I've lost some money on some shorts, I will collect the money and say, well, I'm glad that I was able to test my intuition. I was able to test my analysis and see if I was reading it correctly or if I was wrong. So I think it's worth the price of admission. You got to keep it fun. You got to keep it interesting. You got to play with a little bit of risk once in a while. I also own bonds that are super boring, but if I talked about those, I think I'd have 0 viewers on this live stream. So, all right. So we talked about First Solar. We talked about NVIDIA. Tariffs. I got nothing for you there. I think the whole tariff talk is political speak. I think once whoever wins the White House is going to figure out what's best for the economy. That's how I see it. I could be wrong. And then Mike here. So the government did help me pay for my solar, and I got it, and I'm glad. And actually, it was not necessarily the government; it was the power company gave us such preferential treatment that um, it was just like a no brainer. It was like, you do solar, you save $1,800 a year for the next 30 years. It's like, hey man, sign me up. Let's do this. And they installed it. They did a nice job. I also didn't want to be in too early. Like solar's been out for what, 15 years, maybe 20. And first couple of years, I'm like, I don't want to be bleeding edge. I think the product needs to be tested. And I was correct because the solar panels have gotten more efficient. And we actually got a very small array compared to like the first year. I shopped it like 10, 15 years ago. And they had to like cover our whole roof. It's like, whoa, a whole roof? Yeah. And then fast forward 10 years, the technology got so much better that they only covered like a fourth of what they originally had to cover. So it was like a win-win, more efficient, less expensive. It doesn't make our house look like a spaceship. We put them on the back of our home, so the front like curb appeal of the house is not interrupted at all. All the boxes were checked. Perfect. So I went for it, and I'm really happy I did so. Mr. 123 Cheetah. Have I heard about MDLY? I have not. Michael Anthony. I like the company. I like the company. Hard to buy it. $200 a share. Yeah, you know, it's you can buy shares. You can buy $10 of that share. You can buy $50 because you can do fractional buys. So, but I get it. The psychology of the stock price could be a factor, but I get that. So, Mr. 123 Cheetah, I have heard with issues about solar. Yeah, this is a very important comment here, which is as you look at solar, like we got in with like really preferential treatment by the utility company, and then they changed things like the year after we installed. And I know that I probably wouldn't be doing solar if I was subjected to those changes because it took a lot of the value away. Because the utilities were complaining that, hey, we're losing a lot of money on these solar programs, and they're glad that we're putting the capacity online, but they're like, hey, we're losing a lot of money. They justified it, and then they changed the whole model. Michael Anthony, HRTG. I've never heard of that, but insurance is doing well. I own Allstate. It recovered really well this week, and overall over the last year, it's been doing well. And I got Allstate, but the one that's done even better is Progressive. Progressive just kicked butt. So First Solar, maybe building up inventory to not have to pay so much in potential tariffs. Yeah, okay. So they're kind of like saying, hey, we'll build up inventory because if we get, I think both candidates have been talking tariffs, and these panels I think are manufactured in China. Okay, that makes sense to me. So I would think that they're going to buy less inventory, in 2025. So that supports my theory that free cash flows are going to get better because that inventory cost is going to go down. So Michael Anthony, you bought T on the dip, which is AT&T, and today. So Pfizer dropped. The CEO and investor disagree. I guess that. Well, I think there's going to be a couple of disagreements, but that new investor, yeah, he's going to probably make a few people mad on the management team, but that's good. He's got to push them. He's got to say, hey, I'm not going to tell you how to run the company, but I could just tell you, look at the stock price. Something's not working. You have to think outside the box. You have to break a few models. You have to, kind of abandon maybe what you've been thinking for the last couple of years because it's not working with regards to the stock price. So we'll see how that goes. Brian McLaughlin, GPN. So that's Global Payment Network. And I've covered that stock. I've looked at that stock for 5 years, and it kind of lures you in because it's a low market cap, but I would encourage you to think about quality. Think about a company that you think is going to be much bigger, more powerful, have fewer competitors in the future. And I think GPN is just not big enough and it doesn't grow fast enough to put in that category. So I've put my investment in PayPal, and I've put my investment, if I'm going to go payment networks, I go internationally. I made money on StoneCo, got out of StoneCo, sold it, made money, but I would probably go international into a market cap similar to GPN with higher growth. So Mike, I appreciate you bringing up First Solar. It was something interesting to work on. Keep bringing ideas like that. So Visa. So Brian, Visa, I respect them tremendously, but I can't get myself to buy the stock because I think they're going to be disrupted. They're going to be disrupted just by payment systems, by companies like Amazon saying, why is Visa involved in the transaction and taking a couple percentage points? We'd rather do that ourselves, kind of like the way Starbucks has its customers load up a balance in their Starbucks app. People go in and buy drinks, food, and they decrement from that balance. I think other companies are going to start doing that. It makes a lot of sense, and they avoid the whole transaction fee if that account is linked to their bank. And some of these vendors to households like Home Depot, Amazon, Starbucks, Chipotle, these are solid companies. You have no problem linking them to your bank so you can avoid these fees, because when you link to your bank, you just avoided Visa. So I think Visa is highly respected, big, massive market cap, but I'm not going to be buying Visa anytime soon. I am a PayPal investor, and I also invest in multiple financial services companies. All right. So that is a nice stream, nice way to end Thursday and ease into the evening. Thursday night football, have dinner with my wife, watch a little football. I'm also going to watch the stream that Trader Prad puts on. I like to listen to his approach. Even though I'm an investor and he's a trader, I do get a few pearls of knowledge. If anything, just awareness of what's going on this week in stocks and how they're volatile. Michael Anthony. Yeah, the activist investor is a very good thing. Again, if Pfizer stock was 3 times more valuable, I would be the first one to say, hey, activist investor, get out of the way. What are you doing? They're doing just fine, but they're not. And there's a lot of value there. I believe there's a lot of value in Pfizer. So I'm glad the activist investor is in there. So that is all we got for today. I want to invite everybody and encourage you to become a member of the channel. I would really appreciate it. And you can get more involved in both the live stream as well as investor calls every week. $24.99 gets you into those 2 programs where you just become more active with the community. If you find value in the community, I invite you to join. It'd be great to have you. We're active on Discord, and I think that's of great value. There's a lot of scammers on Discord. I think you guys know that. Be very careful on Discord, but our Discord channel, there's a lot of good knowledge, experience, ideas being exchanged every day. So I encourage you to become a member. If you want to up your game in investing, I think this is a place where you can get a lot of good knowledge and grow. So please consider that. There's more details in the description of this live stream where you can find links to get to this page. And that is it for my promotion of the channel membership programs. Everybody have a nice night. Thanks for joining me. This will be the final evening stream for the week. I'll be back next week for that. We'll be back in the morning. And then we're going to have a live stream on Saturday with Scott's Due Diligence, and he's excellent. So we're going to stream on Saturday. If you can make that session, I invite you to it. And then on Sunday, we're going to have the investor call for investors, and that'll be my weekend. So looking forward to it. All right, everybody, big day for earnings tomorrow. Let's tune in and see what happens. Everybody have a good night.